All right. It's Jared here from Crypto Plan. It's mining charts by Crypto Plan today. We're talking about THOR Mining. A breakout is incoming. All right. Yeah, let's get into it. Let's get into the story here. So THOR Mining, an Australian dual-listed mining exploration company. So these exploration companies are heading into a good period where the gold price, the silver price, commodity prices are going up. And they're all at the bottom of their charts, looking to do reversals, looking to find discoveries and turn into, good stories, whether they be producers or be takeout targets. And THOR Mining is just one of them. But I'm not a fundamental guy, and the more and more I learn about technicals, the more and more I realize is that good fundamentals or not, things have to be good on the charts. You know what I'm saying? So because the tide is with the mining sector, THOR Mining will probably do a lot better. But in general, we're looking at the chart to show you an impending breakout based on, once again, the Stan Weinstein rules, right? So we're looking at a weekly chart with a 30-week moving average. We're looking at price action, volume, and a Mansfield relative strength index. And then potentially looking at, where this trade could take us from a profit perspective. This sort of trade is the one where, you want to get in and then ride it as fast and hard as you can to get out and take profits and roll that over into something more secure and less risky. Or you want to kind of pile into it and then pile out half of it and then just ride it as a long-term position. If you are faithful to the actual story, you could risk off your entire position and then just ride it out for the 3 or 4 years and set and forget it, if you know what I mean. So there's a couple of strategies there, but mainly I'm going to be talking about it in the way of a trade. So going all in with a set amount of money that equates to your risk tolerance. So, whether it's 10% of your portfolio or 1% of your portfolio, whatever your rules are. So going all in and then having a stop loss and riding that trade. So you can see a bunch of stuff on the screen there. So we're going to tick off all the rules. So we've got the green downtrend line. So on the weekly, we've broken out of a long-term downtrend. Which is a good positive sign. So that's kind of like, you turn the blinkers on when that happens. The red moving average line, you can see that price action has worked its way above that and closed and opened above that a couple of weeks now, in a row. Maybe just 1 week it back tested it there. And then you can see also I've got a green band of price action there. So there's some recent price action that showed us that there was a resistance level. So that's where we kind of want to enter the trade. If it's going to break out and go for a run, we want to kind of enter there and abouts, or maybe even above there, but not too far above it. We want to capture as much profit as possible. And then finally down the bottom, we've got above average volume. If you see that yellow circle there, you can see that we've got volume there for the last 5 or 6 weeks that is in general much higher than it had been for the last 5 or 6 weeks. So there's some good signs there. And then just down here on the bottom, and I'll highlight that now, is that on this relative strength, Mansfield relative strength, that has just kicked up from the zero line. It's kicked up into positive territory. So that's also a very good thing. So it's ticking all the boxes that it's about to do a breakout. If we go back to the daily, you can see that, on this green line, it broke out, kind of came back tested, and then kind of fires on out of there, which is a good thing as well, that, it's not just a kind of full fake out, that the price action is going to continue down under this line. So it's looking to be above this line. So today is a really, telling day for it, but I'm not in this trade yet. I had been in it previously and I was in it too early, so I jumped out of it. I stopped myself out of it for a small loss. But yeah, so the idea here is that, see, it's tapped off there at $1.20 and bounce back. So I really want to see price break into this zone. So I've set a stop limit order. So buy stop limit order. So at 120, I'm saying I want to purchase up to 130. So I want to purchase somewhere in this zone. So an order will trigger at 120, 1.2 pence. And then by the time, in that zone at 1.3 pence, I want to be purchasing it. So it's telling the system that I want to purchase in that zone and only in that zone, but I don't want it to be a market order, a stop market order where, it opens a market order from there and I could get gapped up and purchase at 160 and then have it fall back. So I really want to only get in that zone, and that's the only way the trade will work for me. Just moving, I guess, to, and we'll kind of delete all of that stuff, to some, to some ideas of where this thing could run. And we'll just do some of our kind of brief analysis on it. I'm just going to see if it can repeat this move from the March dip again. That would probably be the safest kind of analysis we could do, as in kind of from historically how quickly it ran up. So we've got there, 900%. And so if we were going to do a similar move again, where would that get us? So from down here, if we did 900% on a measured move, and we'll probably be a little bit more conservative, just do 900 flat there. So that gets us above this peak here, but I guess also being aware that this peak is going to provide some level of resistance. So maybe on this trade, you might be looking at what's going on around 4 to 5 pence. So getting in at $1.30, then, nearly doing a 3x up to 4 or 5 pence, and then just kind of having a look at it at this level here of 6 pence to see what is going on, if you know what I mean. And once again, that kind of lines up here with this kind of chunkier zone of price action here. But once it, if you were long term in this trade, you could probably see a pullback around this level or some sideways action. But once it breaks through there, all this price action up here back in 2010, most of the people that bought then and lost money are out of the deal. They're long gone. There's very little overhead resistance, above that this 6 pence line, really. You can see over here on the volume defined node, when we're zoomed out a bit, that there is very little resistance even up to 5.5 pence. So if you were kind of willing to hold on to some of that position, you could see it run very well over the next 2 to 3 years, breaking all-time highs, at £5 would be a very, very good return on your investment. But the thing about these things is they're very risky because they are in exploration, and sometimes you just got to take profits early based on news, based on the surrounding environment around commodities and and what's going on. But the beautiful thing about THOR Mining, from I guess a de-risk perspective, is that they have gold, they have copper, they have thorium, so they've got a mixed bag of elements there that, they're not relying on one commodity to do well, if you know what I mean. So they're quite diverse in their own portfolio, so it's not a bad one to be holding long term, and they're not kind of in a crowded space. They're in some areas where they've got, a nice foothold. I think some of it's in Africa and some of it's around. But do your own research on that, because like I say, I'm not really a fundamentals guy. I'm not buying in because of the story. I just like to know the story to back up the case, to see why is there price action, that it's genuine price action, based on people being, positively speculative towards the prospects of this particular mining company and mining stock. All right, that's it for there. THOR Mining, possible 5-6 bagger in a short period of time there. If you like these sort of videos, please do like and subscribe to the channel, and click the notification bell too if you desire. I've been Jared, this has been Crypto Plan, and I'll catch you on the next one. Bye now.